Greetings and welcome to this case study. Today we are doing a case study on AUDUSD. As you can see in the chart, there are two trades, two sell trades. The one I actually took was this one. So let's talk about the market direction first. As you can see on the chart, this is to the 15 minutes. We've already had a change of character in the higher time frame. Now we are on this downtrend. Had a change of character here. We've also had a change of character here. So market is just following the actual price action. For here, for this region, we've experienced a demand to supply flip. For this other place too, we kind of experienced the same thing, but it was a little bit different. I'll talk about it later. Now where we are to focus more on is this. Let's talk about the first trade. So after this mitigation, let me zoom in. After this amount to supply flip, market had a change of character. Now after that change of character, this is it. We had a change of character. After that change of character, there was a 3 minutes demand supply zone here. The market came back to mitigate it. Then after mitigating it, we broke before mitigating it, we swept this engagement, this Asian high and this high here. We mitigated it. After mitigating it, we swept this low. Came down all the way to this region. Now after that, we also came up again. Market left a supply zone here on the 5 minutes. Market came up and mitigated. It swept here, swept this high. Then it swept here and swept this high. Before going down, it negated a demand zone around here. Let me zoom into this region. So it swept this high, also swept this high. Now had like a flip movement here, indication of this supply and a break. So after that break, we had a change of character. Another entry here, another entry there that led to this price movement to this point. This demand zone here. So for this way, what we had was one is to let me say 1:25. But let's still go down to the 5 minutes to see the actual place market indicated. Okay, this is the 5 minutes chart. This is what it looks like. So after I had this the monthly supply flip, we had a change of character. So each market came back to get this supply here on a break. After that, the market still came back to get this one. So look at the actual place I selected. So is this last bullish um, candle, last bullish candle on the inside band of that. Now look at here, we had a change of character here, break to the upside and break to the downside. So that in mind, you see that we had like clean confirmation, had a very clean confirmation. So that's it. So after that mitigation, let's trade into the downside. Now here we had a flip price movement. I will show you something on the chart. And this is what the flip looks like. So this is it. They will have a bullish price movement. So get to this point. Market breaks this high, hit a higher time frame supply. then it comes down again to mitigate a demand here, the lower time frame, or fails to break it, come up again, mitigate this, to mitigate this, uh, to mitigate the supply zone here for moving. Then I'm taking our entry from here, taking our entry from here. So that was what this second trade looks like here. That's what it looks like. So taking a trade from there, let's see what it will give us. Taking a trade from there will give us 1:14. Give us 1:14. 1:14. Now, uh, remember this is a very high risk trade for this flip entry I showed you. Very high risk trade. Now, let's say we also take that too. We also find another entry, but this time it's on the 15 minutes, but very much visible 30 minutes. So let's go back to the trade here is the trade is here, but let's go to the 15 minutes to see it clearly. So this is the 15 minutes chart. This is a 15 minutes chart. So after market have changed character using this method. Yeah. So the next thing is that market came up and mitigated the supply zone here. So this is it. Is this candle and the inside bar. Candle and the inside bar. Let's go to the 30 minutes to see what it actually looks like. So this is the 30 minutes time frame. So after this is the place we had that flip entry and I say chop too. So after that, market came up and mitigated this supply zone, this clean supply zone here, which gave us this trade. So for this second one, the trade is this third one, sorry, the trade is 1:22 looks to reward. I think profit is that higher time frame demand. So that's it for this one. Let me add up the other one so we can see it all clearly. So altogether, this first one, 1:25. The second one, 1:14. Then this third one, 1:22. So that's what we would have gotten from if we took these three trades. Having in mind that this flip entry here was a very it's a very risky type of entry. That's this one. So that's it for this particular part. Go over to the next trade. So this is the next trade. Let's go back to the 15 minutes time frame. So this is the 15 minutes time frame. We'll zoom into the chart to see the price movement. So this is what actually happened in the market. Now for this one, we should check what happened in the higher time frame. So just like what we had here, the flip, then the change of character and the move. As in this place, what happened? It's also similar to what we had here. The market flipped this zone to this demand zone here, to turn into demand to supply zone. Now market came up and mitigated. It don't really mitigate that particular point. It don't really mitigate that particular point. You used mitigated another supply here and had a change of pattern for this battery. But let's zoom in to see what happened. So after this break, had this. So after that break, market came out and mitigated this demand to supply flip. Now we had a 5 minutes point of interest here where it came back to mitigate. But before even mitigated that part, we had several um, mitigation on the lower time frame. Mitigated this inside bar, mitigated this and go to this point again, to this point. After that, we had a change of character on the lower time frame. Had a change of character here, lower time frame before dropping. And this demand failed. This demand that led to this supply mitigation. The demand failed. Had a change of character here. Market came back and mitigated this inside that supply or dropping. Now let's go to the lower time frame to see it more. Now this is the 5 minutes time frame. We'll have to zoom in. So this is it. Market mitigated this supply here. Then we had a change of character here on the 1 minute time frame. So it's very minor. But we will not focus more on that. Our main focus is what happened here. So we had this inside bar supply. So the next thing is that market dropped, took out this demand, and we changed character with the week. The market came back to mitigate this supply zone, this inside bar supply, hit it and moved. Target was this low here, this swing low here. Market came down, took out that liquidity, giving us a trade of 1:19. 1:19. So that's how we got to this trade. Okay, if I'm to draw what happened here, I'll do it this way. Add the price to the went up high on the higher time frame, came down, broke this low. Then it came up again. Not necessarily mitigate, break that low direct. Let me say something of this nature. So this is what happened in the chart. Technically, we had a flip entry within this. Market did not use it precise. Market came back and mitigated this supply. We had a change of character. It came back and mitigated this supply again. Took our entry. I'm not breaking it down to zero like to this point. I'm just showing you the concept of what happened. This is it for trade. That was how it took the trade for this particular trade. This what happened. This thing that happened there is what actually happened. The higher time frame and lower time frame. So that's it for these two analysis plus extra ones we did. This first trade and the second one. This first one we did 1:25. Then the second one 1:14. The third one 1:22. Then this fourth one 1:19. So to add up all of them, see that is much. So see you on the next case study.